Good afternoon and welcome to this afternoon's webinar from Nolan Business Solutions for our intercompany postings for Dynamics GP. So today we're going to look at one of our modules which we wrote initially for Dynamics GP back in the mid-90s. The aim of the product or the module is to enable you from one company, which we'll call the source company, to create intercompany transactions in the destination company. The module also manages the interaction on the balance sheet between due to and due from accounts. So in the setup of the intercompany, there's two methods which you can enable to facilitate the intercompany postings. We call them the trigger accounts. And for those people of a certain age, you can see Roy Rogers and Trigger there on the left-hand side, or alternate accounts on the right-hand side. What a trigger account does is it's an account set up inside the source company. It's set up in such a way that when you post to that trigger account, we know that that's got to be posted across to the destination company. So the system will automatically reverse the value out of the trigger account and post to the intercompany control account in the source company, and post to the intercompany control account in the destination company and the designated destination account that you set up when you first set up that trigger account. These are very handy to be used because a trigger account doesn't need any human interaction to run. So whenever you post in a value to that trigger account, it'll automatically do all the intercompany postings for you. This means that the Nolan Business Solutions intercompany works with all the modules inside GP. So whether it's a sales posting, a purchase process posting, general ledger journal, or even if it's coming from other modules such as project accounting or field service, you can post intercompany using these trigger accounts. It also means that you can import journals or purchase ledger invoices from external sources using Integration Manager or Smart Connect or any of those tools. And as soon as it's posted, it knows the destination company and the designated destination account that it's got to go to. So a really useful tool for being able to post intercompany. The alternate account is an account which we set up which basically works within purchasing. So as you post your purchase invoice, you can set up the system so it can spot the intercompany control account that you're posting that invoice to, and it'll ask you to specify the alternate account. That alternate account is an account in the destination company. So inside the source company, you're posting to your intercompany control. It will then prompt you to say which company and which alternate account you want to post to in the destination company. As you post the purchase transaction inside the source company, it'll then go off and create all your intercompany postings for you. We won't spend too much time this afternoon looking at the setup of the module. So I'm just going to talk about some of the options that you have in these postings. So with both types of intercompany, as you create the journal inside the source company, we create the destination journal in a location which is outside of the destination company. So the first gate, as it were, is that we can automate the process to let it into the destination company to become a journal inside that company. Why that's a gate is that some organizations want control over those expenditure or those intercompany postings coming in. So if they can have control if you do it manually, or it can be automated so it goes directly from the source company into the destination company. The second gate or control is whether we post that destination company journal. And again, the option there is to automate it or not. And if it's automated, then it'll go into the destination company and be posted directly into their ledgers, and needs no additional input from the staff in that destination company. And again, it depends on how you want to set up your system as to which process you prefer. The system completely works with multi-currency, and we have the ability to set intercompany rates depending on whether it's the source company or the destination companies that dictate those rates. So the system will pick up the correct rates in the same company. If in the UK I create a journal in GBP and I post it to my destination company in the US, it will create a GBP journal in my US company. But because my US company is US functional, it will use the exchange rate in either the source or the destination company to affect the exchange rate between the pound and the dollar at that point. One of the other setup options is what we call daisy chaining, where a source company can post to a destination company, which automatically posts to a third destination company and a fourth, as many as you need. And we have customers whereby they've set up different scenarios as to where they want that final expense to end up within their chain of companies. It's typically where you have subsidiaries of master companies and subsidiaries of those. So let's go and have a look at some examples of how the intercompany process works. So I've logged into my Dynamics GP here, and I'm in my Nolan Business Solutions company, which is my company in the UK. Under the setup, I have setup options for intercompany, and we'll first go and look at the trigger accounts. So I've got 3 trigger accounts set up here. I've got, first of all, an intra-company one. So if I post to this trigger account 100-5100, it's going to post intra-company across to 400-5110, doing the due to and due from destination and source intercompany control. My 400 range of triggers is where it's posting to my USA company, and my 500 range of triggers is posting across to my Canadian company. And you'll see with the account number strings, although my UK company is set up with 3 segments, my Canadian company is just set up with 1 segment. So you can have different types of charts of accounts across the process here. So how does this work in practice? I've set up a trigger account of 500-6130. So let's go and post a journal to that and see what happens. So we'll go into General Ledger Transactions, General. And in this scenario, this is some software licenses that I purchased in the UK, but I need to put the expense inside my Canadian company. So software licenses. And because it's intercompany with Canada, I'm going to post to my 6130 account, and I'm going to say those licenses were £2,000. The other side of that, I'm just going to post to my bank account. I paid for these through my bank account. So this journal, I don't particularly, as a journal entry person, need to know anything about it, except I need to post that account. I could have imported this from any source as well. So once I post this journal, you'll notice the journal's 3902. So these journal numbers become important as I show you what's happening. System comes up with an intercompany report, and the intercompany report tells me it's exported journal 3902 to company Nolan Canada and created a journal number 74 for me. It's also created me a source intercompany control posting, which is journal 3903. So let's go and have a quick look at those journals. So 3903, what that's doing is it's taking the that posting out of my trigger account, my suppliers hardware account, and posting it to my intercompany due from Nolan Canada. And 3902, this is my original journal, which was posting between my trigger account and the cash account. So by simply posting that journal inside Nolan Business Solutions UK, it's posted that across to my Canadian company, and we can go across and have a look at that. I have my settings set to allow that journal to be created automatically inside the Canadian company and to be posted. So I expect going into financial and inquiries, if I look at my 310103 account, which is my license expenditure account, I can see here's my journal number 74, which my report told me was created for £2,000. If I drill down into that journal entry, I can see the other side of that posting. It's posted it to my due to Nolan UK account, and it's also put the distribution reference as the reference that came from the original posting inside the UK. I've got some other information here in that it's an ICP destination transaction posting, and it's intercompany from company TWO, their journal number 3902. This also means if I drill down at this point, it'll open up journal entry number 3902 with inside Nolan Business Solutions and show me representation of the original journal that was created inside Nolan Business Solutions. So full drill down capability from the destination back to the source journal. And if I'm sitting in Canada looking at this £2,000 that's just been posted to my P&L, I can work out exactly where it's come from and why it's there. If the trigger account is an alternate, an account that can be split across a number of cost centers or a number of companies, it also works in that context as well. So if I'd set up my trigger account as a variable or fixed allocation account, you can facilitate intercompany through that processing as well. So what I'm going to do is just go back to my UK account and walk through an example of the alternate account setup. So again, we'll go into financial setup, and you'll see under intercompany postings, if I go to the alternate accounts setup window, I'm in Canada, sorry, let me go back to my UK company. Financial setup, intercompany postings, alternate accounts setup. Here I've set up my intercompany control accounts. The 00 is my intercompany with Canada, and 01 my intercompany with the US. So those being noted as alternate accounts, we now know, or the system now knows, that when you post that account, it's going to ask me as to what destination account I need to post to. Let's have a look at that in action. If I go into my purchase ledger, and I create a voucher here, and this is Brian's expenses, and I'm going to put into a batch CS 1909. So the scenario that I'm using here is that we have a member of staff called Brian Baker. He's actually Canadian, but he's come across the UK, and he's put in his expenses to the UK for some accommodation. So this is his claim number, September 17. And we're going to have £150. So Brian set up that the purchase gets posted to the intercompany due from account. And if we click on the intercompany button, we can see that this expense is going to be posted across to Nolan Canada. But what account should we select? And if I press the lookup button, I actually see Nolan Canada's chart of accounts here. And as this is accommodation, I'm going to post it into his accommodation account here. Save that. Okay. I have my settings also set that if I forget to do that allocation, the system will warn me and tell me you need to allocate against this alternate intercompany account. So now that invoice or that expense claim is on the system, I can save it and post my batch. So in this case, there's my purchase ledger posting journal. And we see here that it's created me a journal 3904, which is posting between my intercompany due from Nolan Canada and my accounts payable, because I'm going to pay that accommodation charge here in the UK. It's telling me that it's exported journal 3904 to Canada and created me journal number 75. So now when I go across into the Canadian company, back into financial, look at my detailed inquiry, and we're looking at my accommodation account in Canada. There's my £150 on journal number 75 that's come through here. If we drill down a bit more into that, you can see it's come from the company TWO, journal 3904. It's posted across to Brian, it's posted across Brian's expenses in the distribution reference, across to my accommodation account and my intercompany due to the UK account. It's also brought across the fact that the source of this transaction was a PMTRN. So if I drill down into that, I see the original transaction as it was entered in the UK company across here, along with the distributions and anything else that might have been put into this particular transaction. So the drill down is not only at GL level, we can also drill down and see the originating transaction as it was entered in the source company. So that's a quick walkthrough of our intercompany postings system. As it was written, like I said at the beginning, mid-90s, there's a vast number of companies, both in the UK and in the US, that use this module on a daily basis to move those transactions across the intercompany and keep track of the intercompany balances across the piece. So thank you very much for your time today. And if you've got any questions or anything that you would like to ask us, or if you're looking for pricing, etc., we've got offices in Boulder, Colorado, and in Canada and the UK. Our website's up on the screen at the moment that you can log into, and there's downloads of the products up there. Or contact us at sales@nolanbusinesssolutions.com, or give us a call in the UK on 01252 811 663, or in the US on 303 665 9343. There'll be someone there happy to help you with your query. Thanks very much for your time this afternoon.